Good afternoon, ladies and gentlemen. Welcome to the webinar Exploring the Export Opportunities in South Africa. My name is Nicole and I will be your host today. We will have 4 speakers presenting and they will share their own unique perspective on the South African market. First up, we will have Ms. Doris Fung from HKTDC, who will give us an overview of the South Africa market. Following Doris, we will have Mr. Emile Plessis, Economist of Standard Bank. And then after that, we will have Mr. Terry Gale, Chairman of Exporters Club Western Cape. He will be sharing the insights on logistic issues between Hong Kong and Cape Town. And last but not least, we will have Conrad, our Johannesburg consultant, to share the practicality and reality of doing business versus expectations in South Africa. After the presentation, we will have time for Q&A session. If you have questions, please don't hesitate to share them via the Q&A tab down on the bottom of the screen. We will discuss them during the Q&A session. Without further ado, let me pass the time to Doris for her presentation. Doris, please.
Share screen we've got. Okay. Good morning, the speakers, and also good afternoon for the audience from Hong Kong. And first of all, I'm going to give you a brief market overview of the South African market. So first of all, I think maybe Hong Kong companies may not be very familiar with Africa or even South Africa. But in fact, if we look at the export figures, South Africa is the second largest export market to Hong Kong in Africa. And actually, 15% of Hong Kong's exports to Africa are destined to South Africa. And then if we look at the products that we export to the South African market, over 60% of our exports to South Africa are telecommunications equipment and parts, amounting to around 538 million US dollar. And then for the South Africa's exports to Hong Kong, they are mainly silver and platinum. And actually for South Africa, the biggest trading partner is China. It accounts for around 60% of South Africa's total trade. And in this area, actually Hong Kong plays a significant role because the imports of South Africa are mostly re-exports from mainland China. And then the exports from South Africa to Hong Kong are actually re-import into mainland China. Well, if we look at the economy of South Africa, actually, in terms of GDP, South Africa is one of the largest economies in Africa, with the GDP amounting over 300 billion US dollar. However, if we look at the GDP performance, actually the economic activity in South Africa was before the COVID-19 was already on a weak footing. And you can see that the GDP growth before 2020, that is below 1%. And in last year, in 2020, because the country suffered the most severe outbreak of the COVID-19 in sub-Saharan Africa, and then there are strict lockdown measures, and we can see that the output is expected to have fallen 7.8% in 2020, and it is actually below the negative 3.7% for the whole sub-Saharan Africa, and estimated by the World Bank. And in 2021, we the World Bank expects the growth to rebound to 3.3%. And the recent data suggests that the South African economy is slowly recovering from the pandemic. It's not a great recovery, but then the recent data shows that the recovery is undergoing. For example, the GDP growth, if we look at the year-on-year change, it's still in a negative, but then the drop is reducing. But we have to note that the unemployment rate is still at a very high standard. But for other parts, for example, the retail trade sales, the wholesale trade sales, we can see that especially for the wholesale trade sales is actually increased a bit in December 2020. And for production, it's also increasing. Especially you can look at the exports of goods from South Africa. There is I would say in the second quarter, there is a great drop because its trading partner or is suffering a hurt in the economic activities. But then after that, the exports of goods is rebound, mainly due to the resumption of the economic activities in its trading partner, including China. But I would say the recovery is actually depends on the resurgence in the COVID-19 and whether the vaccines would become widely available soon. Over the medium term, I think the growth momentum is still relatively weak. It actually reflects the lingering impact of the pandemic. And also there are some pre-existing structural constraints. For example, the power supply and also the debt sustainability and things like that. And over the medium term, the growth or the recovery of the South African economy depends on these factors. Well, if we look at the consumer market, I think for South Africa, the consumer market is in quite a good prospects. With the current population at around 60 million, is actually, according to the Euromonitor's data, the population will reach 70 million by 2040. And it will remain in the top 10 largest countries in the Middle East and Africa region. And then apart from the large population, the population is actually quite young in a global context. The median age in South Africa is around 28, and it is actually below the world average and also the average in other parts of the world, including ASEAN, US, China, Western Europe. But then although it is actually a bit above the regional average, for the sub-Saharan Africa, the median age is around just 18.7. But then if we look at the age composition in South Africa, actually over half of the population are aged under 30. I would say this relatively young population, they are willing to spend, and also they are really quick to adapt to new consumption patterns, and this gives some good expectation on the developments of the South African consumer market. However, as I said, that the South Africa's economy has been hit hard by the COVID-19, and it's especially for the retail sector, especially because the outbreak of COVID-19, there is a nationwide lockdown in March, and then we can see that the unemployment rate just rising, that is over 30% right now, and it implies that the disposable incomes of the consumers just drop. And then these consumers, they just have lower spending confidence. For the consumer confidence index, it actually in Q2 last year, it dropped to negative 33. And this is a 35-year low. And then, but yet in the last 2 quarters, we can see that consumer confidence is restoring. And then as a result, we can see the value growth for retailing in South Africa has recorded a decline of around 6% in 2020. And it's a drop from the 3% growth in 2019. With COVID-19, I think it's not surprisingly that consumers turn to online shopping, and this is not unique to South Africa, I suppose. But actually, in South Africa, we can see some potential in the rise in e-commerce. If you look at the population of the percentage of population using the internet, you can see that South Africa may not be the highest percentage of population that using the internet among the African countries, but then it's actually over 50% of the population, they are some internet users, which is quite high and is higher than its African counterparts, including Nigeria or Kenya is just 20-something% of population they are using the internet. They are using the internet. And then on the right-hand side, you can see a survey conducted by McKinsey in September last year. And then you may see that across the major categories, more consumers, they are now using the online channel to buy these products, especially consumer, you may look at consumer electronics, that 20% more consumers, they are now saying they did buy these products online. And then for other categories such as skincare and makeup and also fitness equipment, they all show the same. And then according to the survey, it also said that about 80% of the South Africans have tried some new shopping behavior. For example, they do look for different retailer, different website, or even different brand. And then they also look for new shopping method, and especially the digital shopping method. And actually, most of them has said that they has intend to continue with their new shopping method after the pandemic. And that's why we can actually expect the growth in online spending over the next few years. Although the growth will slow down over the next few years. And for this survey results is actually in line with some figures from the Euromonitor. And in the past year, 2020, e-commerce sales has increased by around 56%, amounting to around 27.3 billion South African rand. And it estimates that it's likely to maintain a double-digit growth in the next 5 years. And if you look at the major product categories for online sale, they are media products, consumer electronics, food and drink, apparel and footwear. And altogether, these products account for over 70% of the e-commerce sales in South Africa in 2020. Given the potential in e-commerce sector in South Africa, I think it will be an area for the foreign investors to note, and especially I would say consumer electronics and also apparel and footwear. These are the strengths of Hong Kong companies. Therefore, I encourage these Hong Kong companies to look into the South African market if they are looking to expand into Africa. Well, finally, if you would look for more information on different on different regions or markets, or some regulatory latest regulatory updates, I encourage the audience to visit the Hong Kong TDC research portal at research.hktdc.com for more information. And this concludes a brief review of the South African market, and I would like to pass the time to other speakers for their sharing on their practical experience during visits in South Africa. Thank you.
Hello, thank you, Doris, for your presentation. So next up, we will have Mr. Emile from Standard Bank to share about how Hong Kong SME could prepare for the new normal in doing business in South Africa. So may I now pass the time to Mr. Emile? So just a kind reminder, please remember to unmute your mic first. Thank you.
Great stuff. Thank you so much. Good morning to those joining from SA. Good afternoon to those connecting from Hong Kong. My name is Emile du Plessis. It's certainly great to be with you today. So by means of introduction, I can tell you that I've been to Hong Kong quite a few times. I've always enjoyed, the city, the surrounding areas, the people. So I'm really looking forward to being able to visit again when there are less travel restrictions. Or maybe perhaps to see some of you in SA in the near future. So thank you for joining. Today I would like to tell you more about sort of on-the-ground operations and business conditions in SA. As with most of the world, SA is also affected by the ongoing pandemic, and that's causing a bit of a challenging operating environment, particularly during the first half of last year. We've seen some improvement coming through, particularly in the consumer market over the last couple of months. Also in line with what the previous economist Doris Fung was saying about the recovery within the SA environment. So in terms of the economic outlook, we'll have a look at the impacts of the pandemic, but we'll also take a slightly longer term view over the last 10 or 20 years, just to put it in a bit more perspective. And then we'll also look at the new normal, what to expect from a new normal in business, as well as some key other developments in SA. So the first theme is about the impact of the pandemic on consumer spending, as well as what to expect from the new normal in business. So SA has experienced two waves of infections last year. The first was during the winter holidays and the second during the summer holidays in December and January. Vaccine rollout started in full earnest this month, and the first tranche is for the medical staff. The second tranche would be for those with comorbidities and also above 60 years of age. And the third tranche would then include the rest of the population. The aim is to basically target about 40 million out of the 60 million population in SA. So depending on the speed of a rollout and whether other mutations do occur, the third wave can be expected for SA, likely closer to the winter months. At the moment, the second wave has weakened and stabilized at lower levels. So if we look at the banking transaction values, these are done on check accounts. Initially, during the most severe lockdown level 5, there was a 23% drop. And this then gradually improved over the ensuing months as the lockdown levels were also then eased. By August, we found that the total transaction values performed on check accounts by consumers reached pre-lockdown levels, and by October there was about a 32% growth compared to where we were back in April last year. This is an improvement that's based on a combination of easing of restrictions on businesses and their ability to operate, as well as in turn some improvement in employment coming through. There's also been a few special relief funds, payment holidays that also provided a much needed boost to the economy. Now, talking about special relief funds, as unprecedented as the pandemic, the government also made about 500 billion rand available. It's more or less at the current exchange rate, say about 260 billion Hong Kong dollars. And they made it available to support employees, to support businesses. This is about close to 10% of our GDP. And so the aim is really for this to have quite a large effect in terms of keeping the economy liquid, and also making sure that we do have a proper recovery. So in terms of the pandemic, we've seen there were some trends that been in existence before the pandemic, and these then have been sort of, expedited to some extent. And we've also seen a couple of new trends that came through and emerged during this pandemic. So, for example, in SA, we've also seen a major surge in e-commerce, more and more training activities starting to take place online. And I think the important part really is about having an efficient online as well as mobile platforms where transactions can take place in a seamless fashion, a quick fashion, and well integrated also with delivery service. We've also seen there's been a sort of a preference for larger baskets, as well as reduced shopping frequency. There's also been a shift towards going to stores that's located closer to home. From an entertainment perspective, there's a shift towards digital entertainment rather than physical entertainment. For example, rather streaming related service as opposed to large events or even cinema. Still small e-pharmacy, e-doctor services are growing at quite a rapid pace. If we look at tourism, tourism has dwindled, particularly spending on tourism. However, tourism, if you look at it from a domestic perspective, make up a much larger share. So consumers have been focused more towards local trips. There's been quite an increase in remote learning, particularly where universities and schools are able to accommodate that. Likewise, remote working, as in most of the world, pretty much has also increased, particularly for the professional workforce. Due to the pandemic, as can be expected, there has been a decline in discretionary spending. So that also comes through a slightly higher unemployment. From a sort of lease perspective, shorter term leases are favored quite a bit more than your longer term leases. And then there's also the so-called phygital approach. And so that basically is, a combination of physical and digital, as one can expect. And it's really about giving consumers a physical experience, but sort of in a virtual way. So obviously, this is sort of a next normal, as we want to call it. And then, once the pandemic do end, some of these trends, I don't think will really end, but there might be a sort of a hybrid system coming in where you'll have both physical and digital channels, providing really an omni-channel experience to consumers, allowing them to sort of switch seamlessly between different products as well as between different services. The next section briefly turns to expectations from a national gross domestic production perspective. So Doris Fung did touch on this, but just briefly serving as context. So this graph exhibits the recent performance of South Africa, as well as sort of forecasted expectations in comparison to some of our peers. And during the 2020 downturn of last year, SA came in about the middle of the group and is expected to sort of outperform some of our peers over the longer term period, according to forecasts by the IMF. So, and these peers would include developed economies such as France and the UK. It will also include developing markets, for example, Argentina, Brazil, Mexico, and Russia. Basically, sort of from a growth perspective, reaching sort of a highest growth after about 2025. Then furthermore, over the last 7 decades, SA has experienced bouts of high growth, bouts of lower growth, but mostly it's been quite stable growth over a significant number of decades. For last year, GDP could vary. We're looking at about up to minus 8.5. And then rebounding to about positive 4.6% this year. We've got more sectors open. We've also seen some more trading days coming through. And then during the pandemic, we obviously had a lot of businesses that were closed for several weeks, some even months. And because of this gradual lifting, we do foresee an improvement coming through. If we look at it sort of more nuanced from a sector perspective, so the expectations for 2021 certainly is for a recovery, all sectors to grow sort of at positive levels. Part of the growth rates that we see here also has to do with the fact that there's been base effects and sort of quite a bit of negative growth in 2020. So according to, for example, this graph, trade in green is expected to grow by about 11.2% this year, and the sector contributes about 14.8% to the national gross domestic production. So a trade sector consists of both the wholesale trade as well as the retail trade. It also includes the hospitality sector, for example, your restaurants and your hotels. And then we've also got, for example, the transport sector that works quite closely with the trade sector, anticipated to grow by about 8.6% in 2021. It's worthwhile to note that these figures are expressed in current terms. In other words, it includes the impact of inflation, but it's quite aligned then in that instance to how businesses typically would report their annual earnings. So if we take the trade sector and we split out the retail trade component, we can look at it over a period of about 2 decades. And so during this time, the value of retail goods traded increased on average by 8% per year, reaching about 93 billion South African rand in the third quarter of last year. And what's also quite notable is that the impact of business closures during the pandemic has been relatively short-lived, with total sales recovering to pre-lockdown levels in a relatively short space of time. So interest rates also play a key role in the ability of consumers to take on credit products. So compared to the last 7 decades, interest rates at the moment is at a multi-year low. Last time we experienced such low interest rates was about in the 1970s. So lower rates are expected to support credit growth and also in turn consumer market activity. Another component that influences the consumption of imported goods is the exchange rate. So usually more than one exchange rate would be applicable to different importers. But I think a currency pair that we can all relate to would be the rand to the Hong Kong dollar. So when it comes to trade, stability is considered good for overall trade, the importers as well as the exporters. And so looking at a snapshot of the last year, it shows quite a narrow band actually of about 1 rand trading to between 0.4 to 0.53 Hong Kong dollars. And that's quite stable and also positive for overall trade. Moreover, there's been a slight depreciation in the Hong Kong dollar to the rand, which basically means that South African firms can buy more goods denominated in Hong Kong dollars. And so this would make the goods more competitive, and it could also lead to an increase in demand for imported goods from Hong Kong. The Johannesburg Stock Exchange provides a good signal of overall business conditions of large public as well as international businesses. And so within 4 months of the sort of start of the pandemic, it's recovered to pre-lockdown levels, and there seems to be quite a bit of a bull run going on at the moment, reaching significantly new highs over the last 3 months. More trading activities now starting to take place, and that means there is an expectation that the equity markets could even gain some more activity. Then moving on to the third section would be around our trading partners and the categories of exports and imports. So what does South Africa export? As can be expected, mining is an established industry in South Africa. And so most of what the country exports is mining related. Mining makes up about 51% of all SA's exports. The 13% of services would refer mostly to tourism. Cars and agriculture are similar on about 10% each. Other categories include metals, machinery and chemicals. Textiles and electronics make up less than 2% each of the value of total exports. If we then turn to imports, our biggest trading partners consist of China, the US, Germany, followed by European countries such as the UK, France, and Spain, countries in Australasia, such as Australia, in Asia, including Japan, and then India, and then on South America, for example, Brazil. So specifically, SA imports most of the products from China, as Doris Fung also mentioned earlier on. Just over half of that value comes then from the second biggest partner, that being Germany, and slightly less from the US and India. Those would be the third and fourth largest trading partners. So it is clear that China is an important trade partner for South Africa, and several products are consumed in South Africa that are manufactured in China and imported into SA. So next we look at the categories of products imported into SA. The three largest are fuel, transport equipment, metal products, and household equipments. Some of these are consumed directly by the retail markets, such as household appliances. Others that are typically consumed by the household sector would include electronics on about 7.5%, textiles and clothing on about 4.9%, and furniture on about 2.2%. So if we take the overall value of imported goods, and we also take a long-term view, being about 2 decades, or just over that, 23 years, the total value of overall imports grew by about 10% per year, on average, reaching about 1.2 trillion South African rand in 2019. There's been some fluctuations during this period, but I think it's clear that according to this figures, the import market into SA remains resilient over a broad range of different business conditions and business cycles. So we can further analyze each of the main categories of imported consumer goods. So textiles and clothing grew by 11% per year over this period. We've also got, for example, your metal products. These include household appliances, grew by about 8% per year. Electronic appliances by about 9% per annum. And I understand this is also a relatively large import also from Hong Kong, looking at, for example, telecommunication equipment as well as computers. And then furniture and other items grew by about 9% per annum as well. So the SA market certainly shows a growing demand for imported goods over a relatively long period of time. The next section looks at the ease of doing business as well as international competitiveness. So ease of doing business includes starting a business, getting a location, accessing finance, dealing with operations, and operating in a secure environment. SA is 5th on the continent, ranking about 82 out of 190 countries, quite comparable to, for example, Botswana and Zambia. Kenya is in a slightly higher position in sub-Saharan Africa, as well as Mauritius, being an island on the East Coast. And this certainly demonstrates that SA provides a relatively conducive environment to entrepreneurs who are interested in starting their own business on the continent. If, however, an exporter decides to work together with an established retailer in, for example, SA, then several of these aspects would not be required for the exporting firm, as the established retailer would likely already be dealing with many of these aspects. From an international competitiveness perspective, SA has an advantage in several aspects, but also falls short in others. And more work needs to be done to ensure that we do get to a similar level as our peers. So looking at, for example, institutions, SA fare not that well on security and policy stability, but we are, for example, #1 in the world for budget transparency, 26 for corporate governance. Under, for example, infrastructure, electricity access and rail efficiencies needs to be significantly improved, and it is a potential drag on economic growth, but we are 7th in the world for road connectivity and 27th for air transport services. In terms of information and communication adoption, so internet subscriptions remain very low on an international basis, but if you look at cellular subscriptions, I think we reach about position #10. So a lot of individuals have got access and frequently use cell phones. Macroeconomic stability is also coming through sort of more or less average. Health, we score low. And then a lot more work needs to be done in terms of improvement for skills development as well as education. If you look at the business dynamism, we score 4th in terms of the cost of starting a business. So it's not expensive to start a business, but it takes a bit long in order to get all the necessary permits and things in place, unless you've got a good partner that can help you with all of that. SA has an above average entrepreneurial culture and also scores above average for innovation as well as research and development, but slightly lower for its commercialization. So all in all, coming through position 60 out of 141 countries. Then the second last section looks at the broader African continent and explores the demographic dividend. So Doris Fung briefly touched on this, but just for the interest of time, SA has young people, a lot of young people, in fact, the youngest population in the world. And this is regarded as the demographic dividend. Why is this important? Because young people means that in future you'll have a larger tax base. It also means you'll have a larger workforce who will also be demanding more and more consumer products. So from that perspective, the continent itself provides a good opportunity for further growth. If we look at it from a wealth perspective, so one of the reasons for the slightly lower levels of wealth also has to do with the fact that the population is younger, so they've had less time to build up wealth. But there's also quite a bit of variation across different countries and across different regions. If we look at the continent, most of the wealth would have been accumulated in the north as well as in the south, some variability in the middle of a continent. On the left of this slide is the middle class by country. So this dark blue indicates that 75% or more of the population can be regarded as a type of middle class. The light blue, between 21 and 50%, can be regarded as a type of middle class, and then the green would be up to 20%. So the south of the continent, some of the eastern regions, some of the western regions would have middle classes that's between 21 and 50% of the population. Some northern African countries feature with slightly larger proportional middle classes. If we then look at the right, it shows the middle income and upper income segments of a population across several countries, certainly improved. Most of them improved over a period of about 10 years. And this emphasizes the increasing buying power of consumers in these countries as they get wealthier, build up more wealth, and also show a high demand for consumer goods. And then our last section is keep the focus on the African continent and feature new continental legislation that makes it easier to trade across countries on the continent. So as a gateway to the broader African continent, this is further expected to take more shape this year, and also to simplify trade on the African continent with a free trade agreement. So this African Continental Free Trade Agreement started trading on the 1st of January this year officially. So it's just over 1 month old. The deal was signed by 54 countries within the African Union, 54 of the 55 state members. It's been ratified by their parliaments by 34 so far. And basically, according to this agreement, it commits countries to remove tariffs on 90% of products over a 5-year period. And so it certainly would have a large impact in terms of continental trade. So on the one hand, SA serves as a gateway for retailers who would like to expand to the rest of the continent with networks already in place in many of these countries and a good understanding of the consumer nuances and the consumer behavior. But then further, we've seen the median age is also supportive of a growing consumer base, as do the growing sizes of the middle class. And then this free trade agreement would make products also more competitive. Lower price goods could also then see further demand for them. So in conclusion, there are clear signs of a recovery after the pandemic, and the retail sector remains resilient and has been growing consistently over the last 2 decades. SA is a developing economy, ranked high in some instances, lower in others. When it comes to international competitiveness, SA is also regarded as a gateway to the rest of the African continent. And with these African Continental Free Trade Agreement, one should see some improvements in cross-border flows of goods and services. And that also provides a good opportunity to take advantage of the demographic dividend, increasing the middle class and the consumer market on SA, and also the increasing consumer market middle class we see on the continent. With that, I would like to thank you for attending this overview. Hopefully next time we can meet in person in Hong Kong or in SA. I believe there will be a section at the end if you have questions for us to discuss them. From my side, thank you very much for listening, and I will now hand back to Nicole. Thank you.
Okay. Thank you, Emile, for your presentation. We have more comprehensive understanding of the South African markets. So now may I invite Mr. Terry Gale from the Exporters Club Western Cape to start his presentation. He will talk about the logistic issue between Hong Kong and Cape Town. And then so now, Terry, may I pass the time to you? Thank you.
Yes. Good afternoon, friends sitting in Hong Kong and any South African people attending. This will obviously still be your morning, so thank you. I don't have an actual presentation. I'm presenting myself. I think that will be enough as well. So just to give you a bit of a background, and I must first of all say thank the other panelists, in particular Emile, because he helped me, and for that beautiful picture of Cape Town, which is where I am speaking from. So this is how we work in South Africa. We tend to all work in collaboration with one another. So I couldn't get a picture in time. So Emile, thank you very much for that. And also for the previous panelists as well. One of the big factors that actually has come out of this, which I was going to touch on, but I'll open it, is that the African continent is the youngest with the youngest population in the world. South Africa obviously benefits from that, or we as a continent benefit. So it just shows you the opportunities from Hong Kong. When we talk expansion, as I have always said, Africa is our future globally. It's the first time in history that one continent has come together to sign a trade agreement. As Emile mentioned, it's 54 of the 55 countries, Eritrea being the exception, and 35 countries have currently ratified it, and it is operational, and they reckon by June at the latest, all the 90% of the tariffs will be duty-free. Anyway, I digress, but I just want to endorse that because it's just to let everybody sitting on the other side of the world there know the importance that Africa can play. And I'm very honored to be able to talk on behalf of Exporters Club, Western Cape. So from that grounding. I have a good input in what's happening in the port, because we meet with the current situation. We meet the port officials twice a week. We have webinars to ensure that the port functions, and this has happened since June last year, June 2020, to ensure that our port works to the capability that it can. And for those who are not aware, Cape Town terminal was nominated the best terminal in the Southern Hemisphere 5 years ago. We are wanting to get that accolade back again as well. We don't want to be, we want to make this the place, the opportunity where you want to trade from. And one of the things, the reason being, for those who are not aware, where Cape Town is situated geographically, which is one of the most beautifully situated ports in the world, it vies for competition with the likes of Hong Kong, San Francisco, and Rio de Janeiro. Of course, I'm biased, and I would say Cape Town comes on top there. This, however, in this beautiful situation, creates a problem for us as the Port of Cape Town, because we are also sitting at the very southern tip of Africa. We are at the northern end of a peninsula. We are 70 kilometers from where two oceans or two currents meet, the warm Mozambique current and the cold Benguela current, which meets, sorry, the cold Agulhas current, which actually meet there. And this actually, because of this churning and the warm and the cold, this is also, and this being as volatile, we are sitting at almost the southern tip of Africa, a further 200 kilometers south. This actually creates these incredible, the warm and the cold temperatures mixing, which also brings in our world-renowned southeaster, which unfortunately has an impact on the workings of our port. But this has been historically a thing, and looking at the port as it is at the moment, which I'll discuss a little bit later, which is the future of what we're talking about, the port, that there is the things in place that we are overcoming this. I'll just briefly touch on, to give you a bit of a profile of the actual port, the size of the port that we have. And this is just gleaned from my contacts with my friends at Transnet. The strategic impact of the port is to be a catalyst for economic growth in the Western Cape region and South Africa. The Port of Cape Town is a multi-commodity port which handles container imports, exports, and transships with 1 million TEU capacity, TEU being 20-foot equivalent units, and liquid bulk imports and exports with 6.5 million kiloliter capacity, break bulk imports and exports with 1.5 million tons capacity, and dry bulk with 2.1 million tons capacity. The port is also home to ship repair and boasts of 3 ship repair facilities, with a Sturrock dry dock being the largest in the Southern Hemisphere, which is an interesting fact for us, because we have, under lockdown, there were some issues with our dry dock. We actually are in the process of sorting them out. So we want to market our ship repair industry to the world as well. The port has 253 hectare land area situated within the V&A waterfront, making it have more opportunities on mixed land uses. On the water side, the port boasts 9,164 hectare water area. The services expand 24-hour marine operation, containers, general cargo, fresh produce, fishing industry, ship repair, offshore, and obviously we're also looking at the cruise industry as well, which, needless to say, since COVID is not operational, but we are there, we're ready for it when it does become operational. We also have excellent interland connectivity. The port, looking at us geographically, we are strategically positioned between the time zones of East and West, and sits astride the Southern Hemisphere sea routes as a hub linking America and Europe with Asia, the Far East, and Australia. The port's geographic location can provide hub opportunities. The port operates and forms a direct link with ±6 million consumers in the hinterland of the Western Cape, which is obviously an amazing, amazing opportunity for you. Looking at the future, the port plan is to increase our terminal capacity. We currently only have 3 berths operational, to increase the capacity to 5 to 6 berths within the foreseeable future, and cabling handling of the largest vessels currently operating. We also have limitations there as well. I think we can only take up to 12,500 TEU vessels. We're hoping to expand. Of course, the way the market is going and with increased developments and new builds, currently I think the biggest build is 22,500 TEU. Hopefully within within the foreseeable future, next 5 years, we will be able to hand vessels of that capacity. So it's very, very exciting, these developments. Well, but as I also touched on earlier, with regard to looking at the future and how do we overcome the wind situation, we have what we call an inland terminal, which is called Belcon, which is situated 20 kilometers inland from the main terminal in the harbor. And this, when the port goes what we colloquially say windbound, when the port cannot operate because the winds are exceeding 80, 90 kilometers an hour, which means the gantries are unable to work, and it's not safe to work the gantries besides anything else. Just a little note there in between that the Port of Cape Town adheres to all international, the ISPS code. We adhere and conform to all global safety regulations and requirements. And I know for a fact we're very, very strong on safety in the port as well. I don't think I can actually recall any serious problems happening in the port. And anything does happen, the guys are there straight on to ensure that we get resolved the problem as quickly as we can. So looking at the growth, and as I said, we're getting back to Belcon, what the situation is, when the port goes windbound, as I explained, it means that the containers can still be come into the inland terminal and then get railed from there when the port is actually open. So it means it's not for the exporter or importer, there is no delay in getting the containers either in or out, because they will be available or delivered into Belcon. At the moment, it's a rail link. It's just actually started operational within the last 2 weeks. So we are with the test run is with reefer containers, the refrigerated containers. As you probably are aware, that's our biggest trading commodity from the Western Cape, is actually our fruit industry, our agricultural industry plays a huge role in the Western Cape economy and in our export market as well. So this is a great factor for us. It means that our exports aren't delayed, because fruit, as we all aware, it's a just-in-time product. We've got to get it to the market as quickly as we can. And I do hope, and from what I understand as well, I know mainland China, and I'm sure Hong Kong benefits as well, in particular our citrus. Our citrus volumes have increased exponentially from, we grow citrus in the Western Cape, but we have an area just north of Cape Town, citrus down 100 kilometers. And we also have the areas which comes from Mpumalanga. So it's a great, great opportunity as well. And I think looking, as I said, geographically, it helps us. We have, to getting back to a service side, we have from Cape Town, we have direct sailings to Hong Kong via Durban. We have quite a few operators. It's guaranteed weekly service, with about 6-7 operators doing the route. And we also, from an export side, there is an imbalance of trade coming from Hong Kong or from China into South Africa. It's something that benefits our exporter, because the export rates are very, very competitive as opposed to the import rates. So it's a good factor to know as well. And I know, having been to Hong Kong myself, as we have previously said, Hong Kong is a very, very easy country or place to trade with. It really is, and we hope it continues like that. So there is too much red tape in the world that we live in. We don't need red tape. And I can honestly say, to land at Hong Kong airport as well, and as a South African, not have to go through visas, they fill in your form, goes into your passport. It's probably the quickest transit I've ever had at an airport. Hats off to Hong Kong when it comes to that. Just briefly before I finish, I'd also like to just touch on air, the air car, because it's something that we also have to look at. With my talk was on logistics. Air, unfortunately, from our air point of view, Cathay Pacific came into Cape Town in the end of 2018. On a seasonal basis. We were all very delighted to have them flying direct to Cape Town, not only from the cargo point of view, but also from the point of view that the passenger loads, because that also helped our economy, as hospitality and the tourism is a huge factor plays a huge factor in the Western Cape. So we were all delighted to have them land here. I do believe those flights, because they were very, very good, though the flying time was between 13 to 15 hours, direct Hong Kong, Cape Town. We had 3 a week. As I said, it was seasonal, so it came in our summertime, and I think the last flight we left in 2019, and it was going to happen again in 2020, and then regressively COVID struck us down on the 27th of March 2020, when everything was shut down completely. As South Africa at the moment, most of our international borders, they are open under great restriction. and also Cathay Pacific as well. I know they would probably we would hope they would like to come back because it was a good market for them. But at the moment we are sitting here, it cannot happen. But I'm sure that looking at the future as well, because we did open that door, and I think they opened the door as well, that we can. We're also very proud of our airport. The Cape Town International Airport has won the accolade 11 times of best airport in Africa. And interestingly enough, it's been nominated 17 times for best global airport, and this is by no less than Skytrax at their World Travel Market in London. So that says something, taking into account we only reached international status 25 years ago. I think that's something to say. I do know Hong Kong is normally number 1 or 2, but they're always fighting it between Singapore and themselves, the airport. And when we go into Hong Kong, we are aware why Hong Kong is such a fantastic airport. Just getting back at all I can say is there are incredible opportunities for trade between our two parts. We want to build this partnership. I thank Hong Kong Trade Development Council for their passion, for Conrad in particular, for his passion that he has for our province, for the growth that we see and the potential that we see in this province as well. We are there for you. As we said before, as Emile said, we are open for business. Africa is open for business. Never forget, it's an incredible business opportunity to get. We want to become the conduit for getting into the continent because we know the continent probably like nobody else does. So let's work together, let's collaborate, let's make sure that the future is ours. I'd just like to say thank you so much for giving me this opportunity. It's an honor for me always to be here to address you. Next time, I promise I'll bring some pictures along as well, or hopefully we all meet in person and discuss this on a one-on-one. Thank you very much, and I wish you a good day. Thank you.
Thank you, Terry, for your presentation. Last but not least, may I now pass the time to Conrad, our Johannesburg consultant. So Conrad, I pass the time to you. Thank you.
Thank you, Nicole. Good afternoon to all the viewers in Hong Kong. Thank you for joining us today. It's been a privilege to join you. So I'm going to talk quickly. I see our time is of essence here. So I'll quickly talk about the South African market profile. Next, please, Nicole. I'm going to talk about the three major cities. South Africa. Nicole, can you go to the next slide, please? Nicole, next slide, please. Thank you. So South Africa, as you saw the map that Emile from Standard Bank shared with you, we're a large country, and there are six cities of importance. The top three are City of Johannesburg, City of Cape Town, and City of Durban. So let's quickly talk about City of Johannesburg. This in itself is the single largest contributor to the national economy, and our GDP growth in South Africa, as I think our previous presenters have showed, has been about 1.8 over the last 10 years. And City of Johannesburg actually outpaces the average growth. So the city's contribution to the national economy is almost 16%. Johannesburg is as we can see, is the economic hub of South Africa. It's also home to some of the big retailers, the Macro Group, which consists of Macro Warehouse. It also consists in the group Builders Warehouse, which is self-explanatory, does building and hardware supplies, and it's also very big in lighting. We have one of the biggest lighting importers here in Johannesburg, Radiant Lighting. We also have Dis-Chem, which is a Johannesburg Stock Exchange listed company. They are the biggest pharma company in South Africa, pharmacists and pharmaceutical suppliers, but they have recently acquired one of the biggest baby product importers called Baby City, which they have over 400 stores. And this acquisition is going to make Dis-Chem a serious player in the baby product space. We have other big importers of major brands like Kids Essentials and Toy Zone. We also have one of the biggest consumer electronics companies importers in South Africa called SMD Technologies. They actually have their own sourcing office in Shenzhen with about 14 South African expats there, as well as obviously Mandarin speaking people. We also have Mantic Electronics based in Johannesburg. Mantic Electronics is probably the market leader in not in consumer, but mainly in industrial electronics. They're actually a Mobicon company. Next slide, please, Nicole. Thank you. Just a picture of the Johannesburg skyline. I think we saw this in Emile's slide. Let's move on to the next slide, please, Nicole. So with that, the next city is the city of Durban, based in KwaZulu-Natal province. This is the second largest economy in the country. It contributes about 16% towards the GDP. Significantly, it holds the Port of Durban. Now, the Port of Durban, as opposed to Cape Town, is the largest and busiest shipping terminal in sub-Saharan Africa. It does about 31.4 million tons per year. Durban, however, is rather than a consumer economy, it's more of an industrial economy. Most of their GDP is more industrial and manufacturing based. However, it has a decent sized middle income population. It's also home to the retail chain of Mr. Price, and also a company called Retailability. Now, Retailability until recently wasn't a significant player in the retail space. They had about 400 or 500 stores of their own, targeting sort of the middle to lower income segment, until they recently acquired, end of last year, they acquired 130 of 194 Edgars stores. Now, Edgars were part of the Edcon group, which collapsed in 2020, was in business rescue. They sold off a lot of their stores. They had the Edgars chain. They had the Jet Stores chain, the CNA chain, which was more stationary. But Edgars was their fashion chain, and they sold off, in terms of the business rescue process, they sold off 100 of their 30 stores, and these were picked up by Retailability, which is going to give this group prominence in the days ahead. Next slide, please, Nicole. So then we're going to talk about Terry's hometown, the Western Cape province. Now, the Western Cape province contributes about 14% of South Africa's GDP. Interestingly enough, the per capita GDP in Cape Town is higher than the national average. Cape Town is a fairly wealthy, it's a wealthy city. It's also a city that relies heavily on tourism, mainly for the well-heeled tourists. And I think if you'll see that the New York Times actually rated the city of Cape Town as one of the 5 top cities to visit. The city itself is very, very well run. We promote it as the gateway to South Africa. It has a very well developed transport infrastructure, and it's also home not only to the busiest container port, as Terry just very clearly explained, but it's also home to our second busiest airport. Next slide, please. Nicole, next slide, thank you. You can see Cape Town is very cosmopolitan. We have a lot of top international companies that have invested in Cape Town, significantly Hisense from China, as well as a lot of other companies, global companies, Amazon being one of the most recent ones. Let's move on. Thank you. Next slide, Nicole. So Cape Town is also significant in that most of the retail groups have their head office and buying offices located here. So let's talk about the PEP Group, for example. PEP Group is the largest retail footprint in Southern Africa. It has over 5,500 stores. Now, of those 5,500 stores, let's look at them. They have stores across various sectors. Okay, clothing, footwear, homeware, and these include their retail brands such as PEP stores. Now, PEP stores alone, there are 2,500 PEP stores. PEP stores pride themselves on value for money products and services at the lowest prices. Ackermans is also consumer clothing and apparel, so is Duns and Refinery. Shoe City is self-explanatory, it's in the shoe sector. They also have stores and retail chains in the furniture and electronics sector, in Russell's, Bradlow's. In the electronics sector, Hi-Fi Corporation, this is consumer electronics like TVs, big screen TV. And a chain called Incredible Connection, which is one of the biggest across the country, and they deal in computers and all the computer accessories, whether it's a mouse, a bag, a screen. So all of your computer accessories and computer peripherals, that's Incredible Connection. So PEP Group is also a JSE listed company. It has a significant turnover. They are very attractive to get into, but their margins are very small. So their ability their price points are pretty low, okay, because they pride themselves on being a value for money store. So I know that they are significant in the baby sector as well, baby wear sector. They told me that in 2020, despite the lockdown, they saw a 40% surge in demand for baby product, especially baby growers, jumpers, cotton items. They tend to prefer 180 gram cotton interlock. They're very demanding standards. They like to know that the cotton is ethically grown. And also their payment terms, they tend to, they pay on LC at site of LC, or they pay on 21 days after bill of lading. They're very stringent payment terms. They also use external inspection agencies like Intertech. So if it's a first prize to get into PEP Group, but there are significant hurdles to jump through to be listed with them. The second one is Truworths. Truworths is also a JSE listed fashion retailer. Truworths have been past VIP buyer at our Hong Kong Fashion Week for several years. Truworths, again, being a JSE listed company, they have very, very stringent onboarding, what they call onboarding criteria for new suppliers. And they won't take on any new supplier unless they've actually had a factory audit and a factory inspection. Again, they need to be able to satisfy the board that the factories that they've audited and the factories that they've inspected, that there are ethical labor practices. There's no child labor. That the sanitary conditions are good, and they need to meet all of these ethical benchmarks before they load you as a supplier. However, they are a significant, as I said, they're a listed company. They have several brands within the Truworths group, and that's also first prize if you're in the apparel business. Foschini Group, TFG. Now, TFG is an acronym for the Foschini Group. Now, Foschini Group, they have 2,652 bricks and mortar stores across South Africa. They have various retail chains within the TFG Group, including American Swiss Jewelry, which includes jewelry and watches. It's more fashion jewelry. Stearns is their high-end jewelry. Jusaf is more outdoor wear. Fabiani is menswear. Foschini is fashion, high fashion. Then they have their at-home group, and they have Markham's, Relay Jeans, and their sporting goods stores, Sports Scene and Total Sports. Foschini Group, they are regular attendees at our Hong Kong, both our Hong Kong Fashion Week and the Hong Kong Watch and Clock Fair and the Hong Kong Jewelry Fair. They are, as I said, a Johannesburg listed, a stock exchange listed company. They have also stringent criteria for getting your products into there, becoming a supplier. But if you can get into TFG, they've also launched now. I'll talk about it shortly in the online space. They're becoming a major player in that as well. Jet Stores was also part of the ex-Edcon group, which, as I alluded to in my past slide, after the business rescue process, Edcon sold off the Jet Stores division of Edcon, and TFG Group has bought in. It ranges about 130 Jet Stores, which will give them TFG entry into the mid-level market. Queen's Park is also in Cape Town. Queen's Park, they currently using at least 6 suppliers from Hong Kong, most of which they found via the Hong Kong Fashion Week. They've also been regular buyers. but Queen's Park is they have about 86 stores countrywide, and they're a significant player in the especially in the ladies' fashion scene. That brings me to Takealot. Takealot is South Africa's biggest online e-tailer. They do their sourcing mostly through a Hong Kong agent, but they do also do other sourcing. And they basically handle any and every product. From the toy, for those of you that are in the toy business, the toy sector in South Africa is quite vibrant, and it's actually quite a growth sector. Hasbro is our second biggest. Hasbro has a buying office in South Africa. They are the second biggest toy wholesaler in South Africa. The South African the Toys R Us South Africa is a South African owned operation of Toys R Us. I know Toys R Us globally was in trouble in 2019 and through 2020, but the South African operation still remains active and is quite significant. We also have a company called Prima Toys. Prima is still the #1 toy wholesaler in South Africa. They handle the product Moonlight, which apparently is trending #1 on Amazon at the moment. So we also have ShopRite Checkers, which is our biggest food and beverage retailer, but they also have a baby goods. They also have a baby goods division, and they also have a toy division, and they are also a JSE listed company, significant buying power, and they are also frequent buyers to the electronics fair and to the toy fair. Nicole, next slide, please. Thank you. So I'm not going to talk too much about online growth because Emile covered it. I think Doris covered it. So I'm not going to talk too much about this. So in terms of time, I think we can move on because this slide has probably been covered extensively by the two other speakers. Nicole, should we move on to the next slide, please? So the online, I spoke a moment ago about online e-tailers. There's takealot.com, which I just mentioned. There's another one called Superbalist, and the Fashini Group, which I mentioned, TFG a moment ago, which has 2,652 bricks and mortar stores. They've also, sorry, go back. Can we go back one slide, Nicole? Sorry. They also have launched their online offering called My TFG World. Now, their goal is to have all of their brands, 23 of their 28 brands are already trading online, and they aim by mid-2021 to have all of their brands trading online. And that is a significant offering. As you can see, it ranges from everything from jewelry to outdoor wear to menswear to jeans to sporting goods to jewelry. So TFG, apart from being a stock exchange listed company with all of these fabulous retail brands, they are now also going online and have already gone online, and they're going to be a significant player in the online, in e-commerce. Their stated aim is to take on global players such as Amazon.com. So the biggest one, our biggest e-tailer is Takealot.com. Now, as I said, consumers can shop anything you can imagine, from books and beauty products to TV, even to big screen TVs, toys, and more. Now, Takealot.com is owned by a media giant in South Africa called Naspers. Naspers has a 21% share in Tencent. They also have a share in Flipkart in India. So Naspers is a significant player in South Africa, and they have made Takealot.com a very, very successful business. And their CEO stated just the other day in the press that he intends to be so successful that they want to keep Amazon out. He said, we are the biggest and we are the best, and there's no place for Amazon. I think part of Takealot's success in being the leading online e-tailer is their last mile delivery. They have their own fleet of delivery, and they also have a company which used to be in the fast food business called Mr. Delivery. So now Mr. Delivery has now become their last mile delivery, not only for fast food, but also for any of these products. So they have an extensive last mile logistics setup, And I think this is what makes them more successful than places like Amazon, who have to rely on FedEx or on Aramex. The other one is Superbalist. Superbalist is mainly a fashion online retailer, offering both local and international fashion across men's, women's, kids, and also homeware. So I think that basically brings me to the end of the presentation. If there are any questions, I'm happy to take them during the Q&A session. I'm also, if anybody wants to contact me directly, there's my email. I'm also on WeChat. I'm also on LinkedIn, so I'm very easily accessible. Otherwise, you can contact me via HKTDC. But on that note, let me just thank all of you for listening today. I really appreciate it. And hopefully the next time we meet, we can do so face to face, either in Hong Kong or in South Africa. Please don't hesitate to give me a call if you need any further information or if you have any specific questions. Thank you. Thanks, Nicole. Thank you for hosting us. I think it's been great. Thanks to the other panelists. Just a last punt for Standard Bank. If anybody is thinking of doing business in South Africa, let me suggest that they make contact with Standard Bank. Standard Bank, 20% shareholding is by ICBC in China. So, and they have significant operations in China as well. They are very, very well versed in renminbi trade and in Forex. So I think if you're looking at doing business in South Africa and you're looking for a banking partner, I think Standard Bank is people to look for. To that, thank you, everybody. Thank you for joining us, and goodbye. Thank you.
Okay, thank you, Conrad, and also all the presentation from the speakers. And I think the presentation covered most of the topic that the Hong Kong audience would like to know. So due to the time limitation, may I conclude the webinars, and then just in case if you have further questions, please feel free to contact HKTDC, Standard Bank, and also Terry for further discussion. Actually, a recording of this webinar will be shared with you later. So just in case if you want to review, please feel free to do so. And then may I invite you to scan the QR code on the screen and complete the questionnaire for us. And thank you for joining us today, and have a great week ahead. Thank you.
Thanks, Nicole.
Yeah.